Hi believers, this is Amit from Waya team and I'm here to provide a weekly bite and the road ahead in the markets. Before we get into the markets, I would like to point out that we have included futures recommendation to the Waya option app at no additional cost. Waya options has been renamed to Waya-futures and options. This new app is created with the goal of making Indian investors profitable in futures and options trading as well. Why do you think the market is going up since 15th October 2023? Which the answers would be simple by two or three reasons, but it has many reasons. Let me explain. 1. Retail participants have increased drastically, which means there are buyers taking the stocks up. 2. Q3 result expectations are very high from the companies. 3. India is now the fastest growing market in the world. 4th. Increased in capital expenditure across the sectors. 5th. Government focus on infra spending to resolve logistic issue and make India as manufacturing hub. Remember, that is the only area where China beats us. Sixth, lowest debt of Indian companies, which means room for growth in their product or services. Seventh, fastest country to adopt structural changes after COVID to capitalize on our own resources than to rely on other countries. For example, we are the largest consumer of vegetable oil and 80% comes from outside. We have now started growing oil seeds to reduce the dependency from other nations. Same goes with power requirements and many other sectors. Hence, do not be surprised that this is just a froth. Not saying the market won't show correction, but the structural story is intact, and Nifty will hit 36,000 by 2027 or before. Moving to the markets, the Nifty index stood in a narrow range for a few days before resuming upward momentum and setting a fresh record high of 21,900. The breakout signals that trending moves to the upside will resume. The midcap index, which represents the broader market, increased by 0.25%. The Nifty index continues to rise as it follows the higher top, higher bottom structure. We expect the Nifty to touch 22,000 and then move up to 22,200. On the downside, the area between 21,700 will serve as an immediate support. This market rally was fueled by better than expected Q3 earnings from IT giants like TCS and Infosys, with the whole IT index rising 5% the past week. Earnings were mainly in line with expectation. Despite sluggish IT investment by major worldwide clients and challenging macroeconomic headwinds, investors are now hoping that the Fed's projected rate reduction later this year will improve the scenario for the IT sector, allowing large clients to increase the expenditure. After the strong start by technology companies during the last week, the domestic corporate earnings season will be focused next week. During the following week, around 200 corporations will release their December quarter earning with a particular focus on Reliance Industries, HDFC Bank, ICICI Bank and Hindustan Unilever. Coming to the news from Indian economy, markets cheered the World Bank's Global Economic Prospects Report, which maintained India's economic growth prediction for the current fiscal year at 6.3%, as India is expected to maintain the world's fastest growth rate among the world's top economies. Retail inflation, as measured by CPI index, reached a fourth-month high of 5.69% in November 2023, up from 5.55% in November 2023. The rate of inflation remains within the Reserve Bank of India's tolerance range, that is 2 to 6%. The increase was caused by strong inflation in the food and pulses segment, and it is likely to decrease. According to the figures from Central Board of Direct Tax, the net direct tax collection so far this fiscal year has been increased 19.41% to rupees 14.7 lakh crore compared to the same period previous year. On the global front, stock markets in the United States and Europe closed nearly flat on the start of the earnings season. Oil prices have risen 4 to 5% from their previous low as the dispute in the Red Sea region appears to be escalating. As a result, we must constantly monitor future oil price and we will ensure to overlook the companies which has direct impact from the oil prices. Last week we initiated a new multi-bagger stock which is under construction theme. The detailed report for the same will be uploaded by end of today. For today's bulletin, that is all. Wishing you a great trading week ahead. Thank you.